Welcome to the deep dive. Let's jump right in. Today, we're focusing on one-time close construction loans, and specifically how they can be, well, a real game changer for you, the builder. Think simplifying workflows, locking in financing, making the whole build process smoother for everyone.
That's right. For a long time, it's been the traditional two-loan process, a construction loan, then later, a permanent mortgage. But like the materials we looked at really emphasize, this can be a real sticking point. Your clients have to qualify twice, not just once.
Twice, yeah.
And this creates what our sources actually call a big challenge. It adds so much uncertainty.
Exactly. And that uncertainty, it can just ripple through the whole project, can it? I mean, imagine the frustration. Your client qualifies for the construction loan, you break ground, and then maybe months later, their finances change or interest rates shoot up. Suddenly, they can't get that final mortgage. It leads to delays, extra costs, just headaches all around.
Right. Now, the one-time close loan, the OTC, it's a much more streamlined approach. It's basically one single loan. Covers construction, then automatically converts to the permanent mortgage. And the crucial thing is your client qualifies just once, right at the very beginning, before you even start building.
And that's the core of it, isn't it? Why these OTC loans are so powerful for builders, that upfront certainty. So today, we're diving deep into those advantages for you. We're pulling from sources like an article, OTC loan benefits for builders, and some really good insights from experts in a YouTube video discussion.
Okay, so let's kick off with risk. A lot of builders, maybe you're starting out or trying to grow, you might think about building on spec. Building a house without having a buyer already lined up.
Okay, yeah, let's unpack spec homes for a second. I mean, it sounds potentially quick, right? Build it, sell it fast. But like our sources point out, it carries some pretty significant financial risks for you. You're footing the bill for construction, plus all those carrying costs, loan interest, taxes, insurance, all while hoping you find a buyer quickly and at the price you need.
Precisely. And if the market dips or buyer tastes change, or maybe the build just takes longer than expected, you could end up with houses just sitting there, empty, tying up your capital, hitting your bottom line. Now, contrast that with, say, a pre-sold home where your client is using an OTC loan.
Right. Here's where it gets really beneficial for the builder. With that OTC loan on a pre-sold project, you've got a buyer who's committed. And crucially, their financing is locked in from the start. The sources we looked at state it pretty clearly. OTC loan benefits for builders directly reduce these speculative pressures. You're not building on spec, on a maybe. You're building for a buyer who's already financed.
Exactly. The client's gone through underwriting. They're approved for the permanent mortgage before you pour the foundation. It's just a fundamental difference. It takes a huge weight off compared to the maybe not a spec building.
Yeah, that makes perfect sense. And it leads right into the next point, that streamlined process and, well, the security of having the funding locked down. Think about that worry builders sometimes have, especially with pre-sold homes. Will the client's financing actually come through at the end? What if rates jump 6 months into the build? Does that mess up their final qualification with a traditional too-close loan?
It absolutely can.
Yeah.
And our article really highlighted that. It can leave you, the builder, in a really tough spot. You've got a finished house, maybe, and suddenly the buyer can't get the final financing. But with OTC loans, the lenders and the sources are explicit here. They secure the permanent loan before construction begins.
Yeah.
That one step just removes a major risk, the risk of the deal collapsing later because of financing problems.
So practically speaking, what's the impact for you, the builder? Well, fewer lost deals on those pre-solds, right? Because that permanent financing, it's already approved. The article we read specifically said this greatly cuts the risk of deals failing because of those financing snags.
Yes, fewer lost deals. But it's also about gaining certainty. You get that guaranteed end financing. You know that once the home's built to plan, the lender is committed. They'll provide the permanent mortgage, which pays off your construction loan. It's locked in.
And that certainty, well, it must make planning easier. Better cash flow planning, as the sources put it. Knowing the full funding is secure lets you manage your own money, your resources, much more predictably.
Right. You're less reliant on your own capital to carry the build for the client. And the video transcript we saw even mentioned payments, the draws during construction, being faster and more predictable.
Okay, faster draws too. That helps.
Definitely. And because the money's ready to go from day one, projects often see quicker project starts. You avoid some of those early delays waiting for financing butts to fall into place.
Plus, something else the sources mentioned was the clarity around the draw process itself with OTC loans. How you get paid as you hit construction milestones.
Yeah, with the old two-loan system, It could sometimes feel a bit murky, maybe two different lenders, two sets of rules. But with OTC, that draw schedule is actually part of the initial loan approval. It's all laid out up front. A clearer roadmap for getting funds released.
Okay. Clearer draws, faster starts, guaranteed funding. It's sounding pretty good for the builder side of things. Now, what about the client experience? How does this affect them?
Well, a smoother, more predictable financing journey for them that almost always translates into happier clients.
And happy clients are gold, right? That's your word of mouth marketing right there. Referrals, repeat business.
Absolutely. The simpler OTC process, it has real pluses for home buyers.
Yeah.
Think about it. One loan application, one closing. That's just naturally less buyer stress. It's way more convenient than juggling two separate loans.
And no need to requalify later, which must be a huge relief for them.
A huge relief. Plus, there's the interest rate aspect. Our article mentioned a rate cap guarantee. So their rate won't go above a certain ceiling during the build, protects them if rates rise.
That's good protection.
And it even mentioned a potential free market rate float down. So if rates happen to drop by the time construction finishes, they might actually get that lower rate for their permanent mortgage.
Oh, interesting. So they get protection on the upside and potential benefit on the downside.
Potentially, yes. And another really attractive feature that many OTC programs offer is this interest reserve. The article points out this can mean no mortgage payments while you build their home, maybe for up to 12 months.
No payments during construction. Wow, that could be a massive help for clients managing cash flow, especially if they're paying rent or have another mortgage.
It can be a huge financial relief. But, and this is important as the article noted, you have to be realistic about timelines. If the build takes longer than that reserve period, say 12 months, they might need to figure out refinancing or start payments. So managing expectations is key.
Right. Crucial detail. Realistic timelines are always important in construction.
Always. But overall, yeah, the potential for no payments during the build, that's a big selling point. It helps clients manage their immediate finances while their dream home is going up.
And when clients have that kind of positive, less stressful experience, well, like you said, that leads to good word of mouth, recommendations. Our article called that kind of organic marketing priceless for your business.
It really is.
So just by offering and explaining the simplicity and security of OTC loans, you can position yourself differently as the builder who makes the financing part easy.
Exactly. And connecting that to your business growth. Offering OTC can be a real competitive edge. Like the sources suggest, you could potentially attract more clients, maybe even beat competitors who are still stuck only offering the old two-time close way.
So your pitch becomes stronger, something like.
Yeah, like that quote. We partner with lenders. They can approve your construction and permanent financing in one step. This often means a low down payment. You even have no payments during construction. It's a powerful message.
Definitely powerful. Now, to make this even more concrete, let's talk about some of those real-world examples from the YouTube video. It featured James, an OTC specialist, and Liam, who had experience with the traditional two-time closes.
Right. And what really hit home were the real-world stories they shared. Like, they talked about a family whose financial situation changed unexpectedly mid-build. With a two-time close, that could have meant disaster, maybe loan disqualification. Really highlights the risk.
Yeah, that sounds stressful. And then there was the builder, David, in Georgia.
That's right. He apparently switched mostly to OTC loans because he kept running into deals falling apart. Buyers just couldn't requalify for the permanent mortgage at the end. Frustrating.
So he switched.
He did. And the video said he saw direct benefits, smoother projects, and better cash flow, just from changing the financing approach he offered.
So these aren't just theoretical benefits, they're real impacts.
Exactly. These stories really drive home the video's main point. That risk of buyer disqualification with two-time closes. It's real. It leads to delays, extra costs, and sometimes builders getting stuck with houses they can't sell easily.
Okay, now let's touch quickly on accessibility. Can OTC loans help builders reach more potential clients?
That's a really good point. Accessibility. Many OTC programs work with government-backed options. Think FHA, VA loans. And these often come with great terms for buyers, like low down payments. Sometimes even zero down for eligible folks like veterans using a VA loan.
Zero down. Okay, so for you, the builder, that means you can potentially work with a wider range of people, right? It expands the pool of potential clients, as one source put it. Maybe first-time buyers who haven't saved up a huge 20% down payment.
Precisely. It makes building a new home a possibility for more people, which means more potential business for you.
Makes sense. Are there any other sort of secondary benefits we should mention?
Yeah, a couple more. That financial predictability we talked about. Knowing the buyer's final financing is set, well, that naturally helps with your own business forecasting. Improved cash flow and profit forecasting, the sources called it. More confidence the project will wrap up financially as planned.
Less guesswork on the back end.
Right. And also the appraisal. With OTC loans, the appraisal is usually done upfront based on the plans and specs. This reduces the risk of some last-minute surprise appraisal issue messing things up or creating a funding gap right when you're trying to close everything out.
Ah, okay. Getting the appraisal done early removes another potential hurdle. Good point.
And finally, that video summarized some key takeaways really well for builders. Less admin work compared to juggling two loans. Stronger client relationships because the process is smoother. Potential to increase your building capacity because things are streamlined. Faster project completions, fewer financing delays, and even fewer compliance headaches, dealing with just one closing process instead of two.
Okay, so wrapping this all up, it seems pretty clear. One-time close loans offer some really significant advantages for builders. You're looking at less risk, especially compared to spec building, a much smoother, streamlined financing process, happier clients, which is huge, and potentially a way to access a wider market and grow your business.
Absolutely. So as you're listening, maybe just take a moment. Think about how these specific benefits, less risk, smoother process, happier clients, how could those actually play out in your projects for your business's success?
Right. And if this has got you thinking and you want to learn more about how OTC loans could fit your specific building projects, both the article and the video mention a direct contact number, 888-857-8041. They apparently offer a clear talk about your needs and how they might support you.
And a YouTube channel, One-Time Close Land and Home Construction Loans, as places for more info.
Great. So resources are out there.
Definitely. And maybe here's a final thought to consider. In today's market, maybe embracing newer financing tools like OTC isn't just an option, but maybe a key step, a step toward a more secure, more efficient future for your building business. And at the same time, helping more of your clients realize that dream of homeownership, maybe with a bit less stress and more confidence.